Charu Chanana, market strategist at Saxo Markets, joins us now for an analysis. She's live from Singapore. So Charu, just looking at U.S. China tensions first, they're back to the fore. And this is after the alleged U.S. downing of that Chinese spy balloon. Do you see any impact in the market beyond rhetoric or posturing?
I think, yeah, certainly there will be, some caution in the markets because over the last 3 months, since that Bali meeting happened between Biden and Xi, we kind of put a floor to U.S.-China relations. And now suddenly it's coming to the forefront. I think markets are certainly keen to watch how China responds to this action by the U.S., because you do have a lot of U.S. vehicles in the space over the South China Sea or even over Taiwan as well. So any similar action by China could really destabilize the region and obviously send a lot more geopolitical worries across the globe as well.
Okay, beyond geopolitics, look at the domestic picture for us, because last week we had a mixed batch of PMIs suggesting an uneven recovery in China. What do you think will be needed to sustain the stock rally of Chinese A-shares in the past month and a half? Because the next check-in on earnings and the economic data isn't due until March.
Yeah, absolutely. I think so far, the gains that we've seen in the Chinese equity markets or, spilling over to the commodity side as well have been in expectations of that recovery in activity in China. But now I think after, we are over with that Chinese New Year holiday, it is the real test of the activity levels now going from here. So there is likelihood of some caution among the consumers, among the tourists as well. Whether that caution is big enough to let activity levels, consumption levels come up to the levels that was expected, or we do see a restraint taking charge here. I think that will be key, and it will be very important for policy support to continue to flow in because, it's a whole new era for Chinese markets now after 3 years of lockdown, crackdown on internet companies, crackdown on property sector. I think a lot of different moving parts of the equity sectors will have to, be supported by the government at the same time.
Okay, let's talk about Japan as well, Charu, because there's speculation this morning on who the next BOJ governor will be. Regardless of who it is, we're going to see a BOJ that needs to embark on this delicate operation of normalizing policy or smoothing market function. How do you think this will be undertaken?
So I think a lot of it is actually a game of positioning. And right now, the market, the traders and investors are positioned expecting the BOJ to tweak its yield curve control policy as the new governor takes over. So that's, I think, the whole reason why we saw these reports of Deputy Governor Amamiya being, taking the helm, being taken as, negatively for the yen, because those expectations of a BOJ pivot are being thrashed. But I would still say that it's too early. This week, the nominations are to be submitted in the parliament on the 10th of February, and there will potentially be some more names to it as well. Certainly, Amamiya sounds like the most dovish choice right now. But if you look carefully into his comments over the last few months, I think he's also hinted that the BOJ should chalk out a plan to exit these negative rates at some point. So, you might still keep getting those hawkish tilts as well from even the most dovish governor choice.
Charu, you talk about pivot and the hopes there being dashed. What about for the Fed on the back of that blowout jobs report last Friday?
Yeah, I think it was a very mixed week for the U.S. Rates perspective last week when we did see after the Fed meeting, the focus, shifting a lot on what Powell talked about, disinflation. But those, again, the data that we saw on Friday from the U.S. jobs report and ISM services as well continues to suggest that there is potentially room for more rate hikes in the U.S. economy. So I think it's still too soon to expect a pivot from the Fed as well. The labor market report, it's positive for Jan. It's a shockingly high number for Jan, but also over the last 2 months, we've seen upward revisions as well. So it does mean that the perspective that we had about the labor market over the last 2 months also. So the labor market is much tighter than that. So I think it will continue to question those assumptions that the market has about, especially the Fed cutting rates later this year. We might get to a pause, but I think rate cuts is something that the markets need to drive out of focus for at least for this year.
Okay, Charu, I have to ask your thoughts on Adani as well before we let you go. How much is this saga, you think, tripping up India's ambitions to become a global economic force?
I think there is a bit of, again, caution here because corporate governance in India has always been under the scanner. So this issue has just kind of highlighted those ground root difficulties for companies to operate in India. But given that, I don't think it makes any difference to the other positive that the Indian economy or Indian markets continue to enjoy, from demographics to growing middle class, rapid urbanization. I think those factors still continue to support Indian markets, the outlook for the Indian economy as well. But of course, I think we need a more coherent response from Adani to kind of limit the losses that we are seeing in the Adani Group and limit those fears of a contagion, especially to the financial sector as well. We do have some of the Adani companies reporting earnings this week, and I think investors will really be watching for what kind of assessment they have on their debt trajectories and whether we do finally get a coherent response on all of those fraud allegations as well.
Do you see a particular impact on the sustainability indices given the expansion from Adani in the past few years?
So far, actually, we've only seen one of the Dow Jones index excluding Adani Group companies. So I think the impact is still pretty limited. But if we do see some of the other indices as well taking the same route, I think we could see some impact on foreign investor outflows, ramping up or something. But so far, I mean, if we do get a coherent response from them, if we do get a response on the debt trajectory going from here, I think that situation could potentially be avoided as well.
Okay, searching for answers. Charu, thanks very much for sharing your analysis with us. Really great to chat with you. Charu Chanana, market strategist at Saxo Markets.